Hello, property investors. Welcome back to another session of facilities management and utility management. I am excited for this new year, and I hope everyone else is. And I suppose we've had a little bit of a break, so it's great to be back and to be sharing with all of you. Taking advantage of the fact that it is the beginning of the year, I think it's very important that we dig into the idea of property finances. And obviously, the focus is on facilities management. So, a lot of this is around your maintenance itself. And I think what's very important for me to highlight for everyone as property investors is that as a property investor, you really do need to be aware that you fit into a different tax category now. So if you were previously just a salary earner, every month you're just getting your salary into your bank account, you're receiving your pay slip, and it's a lot clearer. You're doing your PAYE. Often that PAYE is fully done through your company. You need to be aware of the fact that you actually need to change your mindset now to the fact that you're not just an employee, you're now a business owner. And I think that's the important thing is anything in property, you need to have that hat on as if it is a business. So you need to structure it like you expect your employer, the companies you work for. You need structure, and you need to make sure you're following the law, making sure you're following the financial regulations, and you're obviously obeying SARS and what SARS expects from you. So having said that, as a property investor, you're no longer just a PAYE salary earner, you're now a provisional taxpayer. And what does that mean? That means that you earn a income from an income source other than your salary. So if you're just using your salary or you're just earning from your salary, then you're purely a PAYE tax individual. But when you're in this position where you have more than one income or an income other than your salary, then you become a provisional taxpayer. So it's very important for you to pay attention to that. Be aware of it. Don't be caught out down the line where you now got delays in your tax filing. So being a tax or provisional taxpayer steps in where you have a income other than from your salary, and that would be if you earn an income from a company that you own, or if you earn income from rental properties, if you earn income from sort of other sources other than your salary. So it just becomes a little bit more technical. If it's clean and it's just your salary, then you don't need to worry. But as property investors, we're about generating wider wealth. We've all got these side hustles. So you need to be aware that you need to comply. And then as far as the tax seasons come, we're now getting close to the due date for the provisional taxpayers, and that is the end of February. So what I feel is important is that you now start paying attention to make sure that you've done all your paperwork, all your records around your property, all the expenses you've had, all the income you've had. You need to make sure that those records are up to date. Don't get to the end of February and suddenly start panicking and trying to slap it together, and you make mistakes and you miss things, and you sort of put yourself into a position where you're paying more tax than what you should be paying. Okay, so that's important to be aware of. The end of February is the upcoming provisional taxpayer season, and then the end of August is the next one. So every 6 months there's a provisional tax return that needs to be done. So what I want us to focus on today is the importance of making sure that you've got all your financial records in place. And again, it comes back to running your portfolio as if it is a business. So you need to have compartmentalized your personal finances and keep it in its own little bubble. Make sure there's no cross-contamination between your personal finances and your property finances. And likewise, between your personal finances and your business that owns your property. So you need to make sure those are in their own little bubbles. You need to clean those up as much as possible. And that means make sure you have bank accounts that are only for your personal stuff and a bank account that is only for your property related stuff. So if it's a property that you own in your name, I really strongly suggest that you have a specific bank account for that property. If it's and then obviously a specific one for your personal finances. So don't let those two muddy each other. Keep it as clean as possible. It makes it a lot more admin friendly when you are doing your bookkeeping. Okay, and then likewise, if your properties are owned by a business, make sure that that business has its own bank account. The same thing, it mustn't be muddying with your personal finances. So that for me is like the first point that you need to start on, and it's very important. If you haven't been doing that in the past, make sure you quickly start setting that up. We're going into a new year. Now's the right time to really clean all of these admin procedures up on your side. Okay, and then the next step that I highly recommend that you do is set up a bookkeeping software system that manages your property's finances. Okay, there's a lot of free bookkeeping softwares out there. I know Zoho Books does a very nice version, and just do a little bit of Googling, find one that works very well for you. The paid versions have a lot more integrations. They're able to just download your bank statement automatically. So that just removes a little bit of the admin. So things like Xero, Sage Pastel, Sage Online. So those ones integrate directly with your bank account, download the statements, and all you need to do then is reconcile. Was this an expense for maintenance? Was it a bank fee? Was it an income from rent? That sort of thing. So you just do that reconciling, but the system automatically downloads the bank statement. So that's with the paid versions. The free versions don't have those bells and whistles, but they're good enough. So then you're just manually uploading a CSV spreadsheet into that accounting software, and you reconcile from there. So that for me is a no-brainer. Use the software that's built for bookkeeping, built for accounting, and it just makes your life easier. It allows you to pull reports. So you're then able to look at the balance sheets, you're able to look at the income statements, and it just gives you such great records that are easy for you to view. Yeah, so for me, that's a no-brainer. The bare minimum you should have is a spreadsheet. So every single transaction, what was it for? Why did I pay this money? Why did I get this money? Make a record of that on a spreadsheet and do like an income statement where you have your income and your expenses and what your profits are. As a property investor, that helps you because it allows you to know exactly what your portfolio is doing at the moment. So it allows you to make the right decisions. You're not making emotional decisions. The numbers won't lie to you. So that's really important for me going into this year, and you guys should be prioritizing it. And then on top of that, the final thing that I'm going to touch on is review your properties now at the beginning of the year. A lot of us tend to get into sort of bad habits where we stop going to visit our properties. We don't do the inspections. We offload the inspections to our agents, and we become neglectful. So it's important, take the time, go and visit each and every one of your properties, have a walkthrough, do an inspection, have that, put on your hat of what maintenance do I need to do? What improvements do I need to do to this property to improve the capital value of the property, so to increase the market value of the property, and then also to make sure that your tenants are happy. The last thing you want is to have high tenant turnover, because it's expensive to have vacancies. It's expensive to search for a tenant and pay for the procurement fees and all of that. Rather, look after your tenants well. And the best way to look after them is to make sure that they're in a clean, tidy, well-maintained property. So now's the time, go view those properties, go do the budgets, review your budgets for your maintenance. If you've been setting money aside for maintenance, which as a good property investor you should be doing, it's time to start spending that money to make sure that it is being allocated and that your property isn't starting to rot. So just to summarize, that's what I wanted to touch on today, is the idea of pay attention now to the tax seasons. Make sure you are managing your paperwork, your admin, your finances correctly. Don't wait to the last minute. And then make sure you review your maintenance budgets and make sure you start planning towards the maintenance. Otherwise, everyone, I wish you all the best for 2024, and let's have a great year. Thank you very much.